Hey, Smarty Pants. If you're saving for retirement, you've probably heard of or was signed up for target date funds, but might have some questions like what are target date funds? What are the pros and cons of target date funds? What's the difference between target date funds and index funds? And what even to look for in a target date fund? Today, we are talking to Sarah Paulson of Valkyrie Financial, certified financial planner, who is going to help us demystify saving for retirement today. This is educational and informational only. Speak with a certified financial planner to find out what is best for you.
Hi, I am Sarah Paulson. I'm the owner and lead financial planner of Valkyrie Financial, a firm that I founded and designed to help millennials.
What is a target date fund?
So target date fund is really like one nice little package that gives you all the investments that you really need to build and save for retirement. Prepackaged takes all of the guesswork off of you. It's like you are getting a professional manager for pretty cheap. They take care of picking the investments, making sure that you have a good, diverse group of investments, that you're ready for any kind of market. And it makes it super easy for you.
Because they're picking the investments for you, they know that when you're young, you can take a lot of risk.
Yes.
And so they'll have riskier investments and then, still some stable investments. But as you age, they'll sort of shift it over for you, do all the work for you, so that the diversity of whatever the investments are makes sense for the age that you are, considering how far you are from retirement.
Exactly. And they know how far you are from retirement because when you sign up for these funds, the easiest way to find out that it's a target date retirement fund is it's going to have a year at the end of it. 2050, 2065, they're usually in 5-year increments. And that tells the fund manager that this person expects to need these funds. They're going to stop putting money into it and they're going to start taking money out of it sometime around that year. So that's where they try to take some of the risk out as they get closer to that year, and it just takes care of it for you.
Sarah has an amazing quiz to find out if you're on track to build and sustain wealth. Check it out, the link in the description. What should people look for in a target date fund when they're deciding whether or not to go with this, one company or another?
The easiest thing to look for is how much is it going to cost you?
Okay.
Really anything that's going to cost 0.5% or more is probably too much. There are a lot of cheap options out there, and one of the easiest ways to make money is to just keep money for yourself. So don't pay for something if you don't have to.
Okay. All right, good. So look for fees or an expense ratio below 0.5%.
Right. Yes.
Okay.
The other thing is to dig just a little bit and see what this target date fund is investing in. If the funds that they're in sound hyper specific, or there's a long list of them, that means they're probably being a little more what's called active. That manager is making decisions about what they think the market's going to do rather than just riding it out. It's been proven time and time again that that kind of investing doesn't work. It's not going to lose you money, but it's just not going to do as well as just setting it, forgetting it.
Mm-hmm. When you say time and time again, it really has been proven, just
it's
over and over and over again.
And there are some situations where it works, but they are few between, and the manager has to get it exactly right, which doesn't happen.
Yeah, I like to say that if there is a manager who can get it right every single year consistently, unless you have about $50 million to walk into their door with, you can't afford that manager, so don't even try.
Yeah.
What is the difference between target date funds and index funds?
Index funds, you are looking at a particular portion of the market. So they are investments that have something in common with each other. The S&P 500 is an index. You can also get super hyper specific, like the regional bank index. So it's banks from this size to this size, and we track everything there. We could be looking at European companies or a specific country. So index funds are funds that usually have something in common. Everything in that could check the box, they're in the club. Whereas target date funds can invest in index funds, but they're giving you a broad, diverse investment mix. So you're always ready for whatever the market throws at you. You will have a portion of American companies, European companies, American bonds or super safe investments. Same thing for European. So you've got this, or international, you've got this broad range of opportunities for wherever there's going to be profit in the world.
Great. So it sounds like index funds are just tracking kind of one particular type of investment, whereas target date funds are a collection. And this is why I think people get confused, because an index fund is a collection of one particular type of investment. And a target date fund is a collection of all the different things that you can invest in, but it's what's best for somebody who would retire at this year or X year, whatever year that their fund is set up for. Pros, like we've talked about some of the pros of it, but could you, like, what are some drawbacks to using target date funds?
Because they're often using funds from their own family, a little bit of family incest going on. Sometimes it's a good way for a fund family to like tuck in a not so great fund and keep it going in the market. If you look under the hood and you see something like hyper specific, like maybe American real estate or regional banks, something that's like, wow, that's really specific. Mm-hmm. That's one of those red flags of what to look for. Like, I'm not sure this is a good fund for me.
It sounds like there aren't many drawbacks. It's just one of the potential drawbacks is that the company might put in some things that aren't great for you.
Right.
Thank you so much for telling us about target date funds. People should definitely check out your quiz to find out if you're on track to build and sustain wealth. Link in the description. Also, if they're looking to start investing or they want to work with a financial planner and you are a certified financial planner who is a fiduciary, which for all of you out there who don't know what that means, basically means Sarah has both the highest educational as well as sort of moral rules that she has to follow.
I have to sign an oath.
Yes. Unlike literally hundreds of thousands of people who call themselves financial advisors, literally. She's probably the highest educational and moral qualifications out there. So do contact her if you want to work with somebody for investments and thinking about retirement, not just retirement though, but also like the rest of your life too. Mm-hmm.
All those big goals.
All those big goals. Sarah, thank you for being on here. I hope to have you on here later to explain other confusing financial things that we don't learn in school, but turn out to really be very important for our lives.
Pleasure, Kate. Anytime.